After you've looked at past and present income and you still owe money, you next can look at future income in the form of borrowing. So we always recommend that families look at borrowing as a last resort. Above and beyond the federal direct student loan, credit is going to be required, good credit to be approved for loans. So you really only want to borrow what you need. And think in terms of the 4-year plan, as I mentioned earlier. Even though you're applying each year, if you do need to borrow, look at that monthly payment for that loan and multiply it by 4, just so you can get an estimate of what you'll be paying if you're borrowing for each of the 4 years a student is in undergraduate school. As I mentioned earlier, consider the student's post-graduation plans and to determine how much will be feasible for them to help pay back any family or parent loans. Understand the options that are available to you. Do your shopping, be a wise borrower. MEFA has a great college loan options webinar available on our website that you can look at. We also have some live webinars coming up in June and July that you can look at and listen in on, where we'll help you determine and shop and compare for different college loan options. There are lots of options available, including those through MEFA. MEFA does have one of the lowest cost options that are out there, that are also lower than even the federal loan for parents, the Family Plus Federal Plus loan. You want to look at the different types of interest rates. What is the fixed rate that you're going to receive, not just the lowest advertised rate that a lender may be advertising. Look at that repayment timeline. Are you thinking of deferring the loan? If so, that might be a good option for your monthly budget, but those loans typically might have a higher interest rate if they're deferred. Or you're paying more in interest because you're not making payments on that principal and interest over time. So you do want to look at the total cost of the loan, as well as who is responsible for this loan. Is it a parent-only loan? Is it a family loan, like a MEFA loan, where parent and student and creditworthy co-borrowers, such as a parent, are on the loan? It's important to know who is going to be responsible for paying that loan back and have that conversation with the student. Do keep in mind when you're shopping, multiple credit inquiries within a 45-day window only show up as one credit inquiry on your credit report. As I mentioned, it's very important to understand the cost of borrowing of a loan. So here we see MEFA's undergraduate loan payment calculator on mefa.org that allows you to look at the total cost of the loan, as well as the monthly payment amounts for different loan options through MEFA. So if I look at a loan for $20,000, for example, for a high school senior, 4 years before graduation, and then you want to put in your credit profile or estimate it. I'll use the middle amount, which is very good. And here you can see the 5 different repayment options that MEFA offers for undergraduate students, the monthly payments for each of those for a $20,000 loan, as well as what's very important, the total cost of that loan if you make the minimum payment for the full term of that loan. You can also see here the interest rates and range of APRs. So MEFA's rates are quite low compared to most private loan lenders, and it's even lower than the Federal Parent Plus loan, which is over 9%. MEFA's rates range from 5.75% to 8.95%, depending on the repayment option that you borrow and your credit. So it's a great way, a great tool to use to start estimating, running some numbers, and just determining options to pay the bill before you even have to borrow.